your life insurance advisor. And today I want to talk about the difference between mortgage insurance versus life insurance. The mortgage insurance we're going to talk about today is the type that you would buy when you're sitting down with your mortgage broker or your bank and you're filling out, your mortgage papers, and they pop the question on you, would you like some life insurance with that? And you think to yourself, yeah, sure, I want to make sure my family's protected, so yeah, I would like that. So then they proceed, there's 4 or 5 questions that you would fill out, and they're pretty broad medical questions, and then bang, you've got your life insurance, away you go. The problem with that is that in most cases, bank issued mortgage life insurance or mortgage company life insurance is post underwritten. And what that means is that after there's a claim made, then they would decide if you actually ever qualified for that life insurance. So if you passed, your family would make a claim, and then they would access all your medical records and then go through those 4 or 5 broad questions and see if you actually qualified. In a lot of cases, people don't qualify, and that's a big issue. And what happens then is the bank, if you're lucky, will say, here's your premiums back that you paid in, to shake your hand and part ways and kind of leave your family hanging there. So that's not the best situation for your family. The second issue I have with the bank issue mortgage insurance is the benefit structure. If you say you took out a $400,000 mortgage and you're going along and you got your life insurance wrapped into your payments, and you're going along, you're making payments, and then say year 4 you've got it down to, your mortgage is only $300,000, you're like, wow, geez, I've done good, But then you look and you're looking at your life insurance, and you're still paying at the $400,000 rate. Well, that's what we call a declining benefit. So even though you're still paying for the $400,000 life insurance rate, the benefit is only what your mortgage is, and maybe at that time it's $300,000. So that to me is an issue. I always recommend staying away from declining benefits. So, and the third and final issue I just want to talk about today is the actual benefit payout. So if you're lucky enough to qualify and your family's made the claim and everything, there would be a one-time payout, and it would go directly to the bank or the mortgage company. And say if it was $150,000, that $150,000 would go directly to your mortgage company or bank. Maybe not the best. It'd be nice, but maybe not the best situation. So let's talk a little bit about life insurance, okay? So life insurance, it's underwritten before you actually make a payment to them. So what happens is you'd be sitting down with your life insurance agent. I know sometimes you can call, but I always suggest sit down, get your agent in front of you, maybe do a financial needs analysis with them, and find out, to make sure you have enough coverage to cover all your bases with your family. You don't leave them hanging. So yeah, certainly sit down with your life insurance agent, go over all the necessary documents and applications, and then once you submit your application back to the insurance company, if we use that example like $400,000, a nurse would most likely come out and visit you, and she would probably do a paramedical, ask you all the same questions maybe your life insurance agent asked you, check your vitals, maybe take some blood, and maybe even other tests. But you know what? That's a good thing, because that information is going to go back to the insurance company, and it's going to go back to the underwriters, and they're going to make a decision. And then they're going to let your agent know, and then you can sit down with your agent and go over the decision the insurance company has made. One of 3 things can happen. You can be approved as written, you can be rated, or you can be declined. And being rated just means that you're at a higher risk, so your premium's higher. But that's all a good thing, like I said, because you know ahead of time before you start making payments. You don't go through life thinking you are covered, only to have your family kind of hanging there if you weren't. So that's another kind of bonus to life insurance. And so the second benefit is the actual payout structure. And what happens with life insurance in most cases is that if you pay for $400,000, your benefit is $400,000. I mean, you want a level benefit so that what you pay for is what you get. And it's as simple as that. So certainly that's a better situation than the mortgage insurance where it goes down. You know, you have a declining benefit. So I always like to stay away from that type of insurance and get the level benefit for my clients. And the third and final benefit is the payout. Certainly, the payout would go directly to your family, which is a bit better than going to the mortgage company or the bank. So your family would have access to those funds. And kind of with that, usually if it's a couple coming to see me, I always recommend a multi-policy plan. And what that means is that there's two policies wrapped up into that plan, each for we'll use that $400,000 example, each for $400,000. So the first, the first spouse would pass, and there would be a $400,000 payment. Well, the surviving spouse with their family still has their insurance policy for $400,000 too, and if something happened to them, that would go to their family. So a little bit better than the one-time payout from the mortgage company. So in brief, let's just go over the benefits again. So mortgage company bank-issued insurance is post-underwritten. You don't know if you qualify in most cases until after there's a claim made. Life insurance is underwritten before you actually make a payment, so you know if you qualify or not. Bank-issued mortgage insurance, there's a declining benefit in most cases, and then with the life insurance, it's a level benefit. And then finally, the payout goes directly to the bank or the mortgage company, and the life insurance payout would go directly to your family. And in some cases, there would be two payouts for a couple, so it's a much better situation. So that's kind of my take quickly on it. There's a few more issues with that, with the mortgage insurance that I'd be certainly happy to discuss with you. You can go to my website, www.comparelifeinsurancequotes.ca. You can fill out the online form there, or you can just give me a call. I'd be certainly happy to talk to you over the phone, or just leave your comment right here. So I want to thank you for listening to me today, and I'll be back in probably a month with another life insurance tips. So stay tuned. Thanks a lot.